monetary policy responses of the major central banks to keep interest rates on hold and adopt a dovish monetary policy stance should benefit emerging market economies with solid macroeconomic fundamentals. On the domestic economy, the latest data from the Ghana Statistical Service and the bank's composite index of economic activity both show that economic growth continues to remain robust and broad-based, although at a moderated pace relative to 2018. Consumer confidence has rebounded and businesses are fairly optimistic about industry prospects. Strong growth in monetary aggregates reflects significant pickup in aggregate demand, buoyed by a rebound in private sector credit following the cleanup of the banking sector. Over the medium term, growth will be supported by the services sector, especially as the banking sector continues to grow stronger and resilient, as well as the continued implementation of growth-oriented programs in the industry and agricultural sectors of the economy. The external sector performance continued to remain strong, with an improved trade surplus for the third consecutive year. This contributed to further narrowing of the current account deficit and supported additional reserve buildup of $1.3 billion. This should provide strong buffers to withstand shocks and ensure stability in the foreign exchange market. Fiscal policy has been a source of considerable stimulus. The 2019 budget execution was broadly in line with expectations, with the budget deficit outturn almost on target and within the fiscal rule of 5% of GDP. While acknowledging that there are electoral cycle fiscal risks, strong commitment by the fiscal authorities to stay on the consolidation path should help sustain the stability and growth achieved over the past 3 years. Overall, the economy presents fairly resilient and robust performance with regards to output growth and a strong trade and payments position. The economy is positioned firmly on the path of stability, with inflation forecasted to stay within the medium-term target band of 8 ±2%, bearing any unanticipated shocks. Under these circumstances, the committees viewed risks to the inflation and growth outlook as broadly balanced, and therefore decided to keep the monetary policy rate unchanged at 16%, while standing ready to take decisive policy actions when necessary to ensure that inflation remains within the target band.